What's going on, everybody? It's October 27th, 2022, Data Log episode 40. And today we're going to cover US 500, what I forecasted in the Telegram. If you aren't already, go ahead and join. It's in the link below. But today was a prime example of what you would call a seek and destroy day. And these environments can be very hard to navigate if you're a newer trader to ICT's concepts and obviously just in general in the markets, because what this does is creates a very back and forth. And if you can't navigate this, you're going to get burnt. You're going to take if you start tilting or have other emotions that come into play here, you're going to have a bad day. So I forecasted in the morning. I said 38.12 is my draw on liquidity. I was also looking for this yesterday. So I was looking at this chart here. I was looking at the 15-minute, and then underneath this post, I was noting the 5-minute buy side liquidity, the relative equal highs. I wanted to see something like this form right at the open, but we actually left the relative equal highs. So I said, watch relative equal highs. I said, study that buy side after we take out sell side. It's not going to be left like that. To me, it just seemed super engineered. It seemed too clean for them to leave it like that. So after we took the sell side, then we ran to the buy side. Okay, so when you see these huge pool of liquidities opposing on either side, especially in a very tight consolidated market, you can sort of start to guess what the market's going to do. And this is something you probably shouldn't really be participating in. The only really thing I'll mention is the short setups, which after we took the buy side, I was okay if you went short. I think that was super valid. So I said watch the buy side after you take sell side, and then at 9:32 it said now watch the sell side at 38.12. Game of ping pong, and then after we took the buy side, we went down into 38.12, as you all know. So forecasted as predicted, and I think it was super fun to watch personally. As you all know, I'm just tape reading this week. I'm not even trading. Already met my monthly goal, so it's been a pretty choppy week. I think there's some good setups so far, but you have to be nimble in these environments, and especially ahead of the elections and things that are going to happen in November. It's going to shake the market up a bit. Regardless if you know the algorithm or whatever, it's still going to put volatility into the market and create uncertainty. So doesn't mean you can't profit or there won't be setups, but maybe expect a little more losses and a little bit not as perfect accuracy as you would like until that kind of clears up. Okay, so I want to start out actually at the weekly. I always draw your attention here because I think this is so crucial and rarely anybody talks about it. But looking at the weekly, I talked about how yesterday I wanted to see how the weekly candle closes. So tomorrow I'm very curious to see how we close. If we close above the premium end here, then we can expect to draw into this bearish order block. If we close bearish, if we obviously close underneath the premium end here, and if we do close as a bearish candle, then we can still expect lower prices because this is a reclaimed fair value gap. It's doing the work that as anticipated so far. So looking at the daily, we ran out the buy stops. To me, this isn't necessarily bearish just yet. I like the way we dropped down into that volume imbalance I mentioned, and then the down close candle. So if you extend out that in time, we hit the premium end there, and then we closed above that volume imbalance, which is really nice to see if you are being bullish. If we closed beneath that volume imbalance, that may have led to a different analysis for me. But something to note is this could potentially, I'm not saying to go short or anything like that, but that could be the high of the week, and that could be a swing high in place. So we have a high to the left of it and a low to the right of it. So that's a valid swing high there. Okay. Something to note, going down to the 4-hour, it just seems very sloppy to me. But the structure is still there as far as being bullish for right now. You have your dealing range low to your dealing range high. So if we take our fib, price dropped down into a discount relative to that dealing range. I don't think it's necessary to drop down into this fair value gap here since we've already tapped into it once before. It can act as a claim fair value gap, but I just don't see the need for it. This could turn bearish. I would just keep that in the back of your mind, knowing the weekly profile. I just don't, unless this thing really rallies bullish, we could see downside or maybe consolidation, because this to me doesn't, it doesn't really seem high probability currently to me. So something to keep note of. We ran buy stops, possibly the high of the week is set in already. So I don't think I'd be expecting bullishness tomorrow necessarily. Looking at the 1 hour, we were targeting all day today and even yesterday 38.12. So we got down into there. There was a small little fair value gap underneath the bearish order block, which makes it a bearish order block. We didn't quite tap into it. That's okay. 30-minute, we cleared the buy stops, ran up into that fair value gap, used it once more, and then displaced lower. 15-minute time frame, very beautiful. Look at the body, the closure of it, respected the discount low of that fair value gap very nicely. And then the 5-minute, this is what I was paying attention to. So we ran the buy stops and then we displaced lower. Prior to that, I was actually surprised on when we dumped like this. We didn't take out 38.12, but as soon as I saw price rallying, I was like, okay, they're just engineering more liquidity underneath that algorithm is underneath that low there. So I was fairly confident that we're still going to displace lower. Actually, something to note here, because I think somebody asked about this earlier. When price was like this, and you're looking at 38.12, and then you're looking at this fair value gap, this is how you can get burnt in these seek and destroy profiles, because you're not paying attention to the liquidity that's being built. Having relative equal highs like this, you should not be shorting. This isn't even the YouTube model. We need the buy stops to be ran and then the displacement lower. Just because there's a fair value gap and liquidity to target, and because we're so near it, there's no reason to be going short there. And even if you took it from the dealing range high to the dealing range low, that's not inside of a premium. So there should be no reason to be going short there, okay? We displaced higher, and this is when I put out the Telegram message. So now study the sell side, 38.12, 9:32 a.m. Right? It's actually right here, 9:32 a.m. when I said study this low. Okay, so nothing's guessing here. It's all to script. And if you watch price action play out, I don't think there were super beautiful setups, to be completely honest with you. You could have sold off of this 15-minute. If you have experience in your understanding order flow, we ran out the buy stops. You're returning into a parent PD array, which is that 15-minute, 30-minute fair value gap inside of a premium relative from that dealing range high down to the dealing range low that was set. You could use this low here. You're inside of a premium. So you could have went short there off of the context. Again, we ran the buy stops. We displaced lower, ran out buy stops once more inside of that fractal dealing range, and then we displaced lower. Okay, if that's too confusing for you, that's okay. Looking at lower time frames, there's really nothing that super qualified me to really want to get into a trade. I think if we came into this fair value gap here, I would have really liked the shorts, because if you're taking from dealing range high, dealing range low, that would be inside of a premium if you got above the equilibrium. Okay, there's nothing inside of here, even on the 3-minute, 2-minute, or even the 1-minute for me to really go short there. And price just basically dumped. Use the 5-minute bearish order block, sent price lower. Very just sloppy price action and delivery of price. To be honest with you, I don't really like the setup, even though I know where price was going and I was fairly confident in it. My rules still supersede what I believe price is going to. So even though I knew price was going to 38.12, I would still need the fair value gap inside of a premium to go short, and there was nothing inside of there. And sometimes that's just how trading goes. It was actually quite interesting. I don't know if it was on the last hour of the day here. It looks like it was. Price just immediately dumped. Took out the sell stops underneath here. We have some sell side liquidity resting at 37.26. Watch the premium end of this fair value gap here. See if we can use that to maybe send price lower. If we get above that, if we get above this high here, could turn consolidation, or we could possibly head to the buy side there. That's my thoughts currently on the market. I think there's something else I wanted to show you. What really tipped his hand was the S&T divergence. So US 100 was making the lower high there. US 30 was making a higher high, and then US 500 was making the higher high. It was actually making the lower high yesterday. It was also S&T divergence there, but it was making the lower high there. Same thing with NASDAQ, and then US 30 made the higher high. So that's tipping its hand, S&T divergence. Let me go through. I want to tap into a couple other things. I posted this, and I thought it was actually very prevalent to the day because I see so much Twitter drama. And if you're new and you started going on to Twitter because of ICT, and now you see a lot of these dramas and beefs, and you can get sucked into it. And especially me, I mean, you've said it in here, like it's hard for me to keep my mouth shut at times because I would consider myself one of the better traders in the ICT community, and it's no ego intended. I've been around here. I've been studying this concept for 3 years now. I've been in this for a long time in general, trading wise, almost 5 years. And the reason I started doing these daily logs is honestly because I saw so much bullshit on Twitter, on YouTube, people teaching so many incorrect ways. I mean, I would be very, very careful of who you follow. I'd be very, very careful, and I would dissect them because this industry is filled with fakes and people that put out an image that they're successful. And unless you actually see results from a verified track record, or at least them posting live trade results, I honestly would not follow them, man. It's quite crazy what you see out there. And I don't want to go too much on a tangent because again, I'm not too much for drama, but please just be wary of who you're following because I think it's so huge. And if you're just here to learn, man, just keep to yourself. Just follow very few people. I don't even tweet that much. I have like 600 tweets because I honestly don't care. I don't even have Twitter on my phone. I only care about helping other people, and that's really it. I also posted this, my Forex tracker, my FX book, I'm sorry. And you can see here almost up 7% since September. So I'm working with an investor currently. I met through the charter member forum and it's been going amazing. And it really just goes to show that, if you put in the time here, you put in the work, you're going to have to suffer. There's a lot of losses. There's a lot of pain, adversity. And as long as you can keep prevailing through that, man, it gets so good. And I'm just really starting to see that in the last 6 months. I mean, this is just recently. I have even more verified track record from just this, but it really goes to show, man, that if you put in the work, you work your ass off every single day, you study the right content, you study the right people, and you put in the hours, you actually forward test, you're in the market, you're pushing a button throughout all the losses, throughout all the years, eventually you're going to prevail and eventually you can become successful. And I'm going to continue to prove that to you guys, not for my own sake, but to help others and inspire them, because I wish I followed somebody like myself that gave me that inspiration. And there's plenty of people who have, but I really want to be extremely transparent, not to show off, not to boast, but to simply show you that it's possible. Not that, ICT can do it, because of course he's the creator of these concepts, but somebody who studied him very closely, worked very closely with his concepts, that this is possible. So I'm going to leave it at that tonight. And until tomorrow, good luck and good trading, everybody.